Hello, everybody. It's Adrian Zdunchik, CMP Charter Market Technician, Crypto Birb, and I welcome you to the next episode of our incredible, amazing RWA series. And there's a lot of reasoning behind the RWAs, being on the top right now. It's actually one of the very relatively good performing market sectors right now, as opposed to most of the crypto that has been on this fancy little roller coaster throughout the past weeks and months. RWA still, resurfaces on the 100% year-over-year growth. So it's gaining a lot of attention, it's gaining a lot of traction, not only from the retail investors, also from the people like Larry Fink that is talking about the next asset class, the next asset generation being tokenized. And I'm joined today by this incredible opportunity by Paweł Łaskarzewski, who is the CEO of Nomad, Fulcrum, who are incredible partners, and Pierce Crosby of Merchant 7, and he's a former general manager at TradingView. And well, let's start it off with how you're feeling today, gentlemen.
On my side, everything is fine. The market is interesting, and we finally see some calm down on the market, and yeah, like everything is perfectly fine.
How about you, Pierce?
Yeah, I cannot complain. I mean, obviously, wild roller coaster, but for those who've been in the business for a while, that's just the name of crypto in general. I would say obviously a massive kind of reprice over the last few days, but I think in general, kind of not surprised, especially with kind of the macroeconomic environment and a lot of that filtering back into more high risk assets, but. It's just another day in crypto, I guess, ultimately. So
correct. And well, just like I mentioned, RWAs is actually one of those well-performing market sectors, right? As opposed to most of the industry. Of course, meme coins are on the total market cap side, 50-60% down, 56% last time I checked today. Meme coins overall, like fart coin, to an extent of what inflation is actually, how much inflation there is in the cryptocurrency market, it can be treated as an indicator like that. It's actually 80-90% down. Meme coins from Trump, Melania are down like there is no tomorrow, basically, as well. They keep dipping, and the dips keep dipping as well. And here we are, RWAs, right? So let's talk about why it has any future. Does it have any future? Why it has any future? So I'd love to open up this conversation to you, gentlemen, Paweł and Pierce, about the long-term implications of RWAs, right? What sort of impact are we talking about? What sort of changes are we expecting, Pierce, from your perspective?
I mean, I think in terms of adoption of RWAs, we're definitely seeing a lot of kind of tier one firms that are actually taking a more serious kind of look at these as an asset class. I would say in general, some projects that have launched over the last, I don't know, call them, 12 to 18 months are much more speaking the language of traditional markets. So previously RWAs were kind of, crypto native projects that really didn't have any kind of basis in historical projects. But the reality is that once some of these actually start talking the language of traditional markets, there's a lot more adoption and interest from traditional players as well. So it's a good outcome, I think. Obviously, it's a sad reality, but the simple thing is that kind of traditional asset managers aren't interested in your fancy naming of whatever new project you launch, but rather, they want to speak their language. And so for firms and projects and tokens that can actually think about launching within the framework of, kind of existing finance and existing kind of collateralized assets, that's really where people spend a majority of their time, is kind of sussing out who knows how traditional markets work versus kind of who's just interested in naming their, new project something more, discreet and really kind of like confusing, if you will. There's been some bad stories in recent time as well. Like there's a project we can talk about called Usual, which I thought was quite interesting, watching that kind of uncouple from its kind of underlying, kind of yield, which was a very kind of bizarre thing, but ultimately people just didn't read into the details when they're kind of buying up this token. But there's a lot of others like Ondo and Mantra, which have done insanely well despite a lot of strategic unlocks from kind of early investors and stuff. So overall, the asset class is moving in the direction of more traditional finance, and I think that that's very exciting because then you have larger pools of cash coming into the market in general, and that does it kind of filter back into other assets, not just RWAs as well.
Pavel, what's your take, right? Because on one hand, we have this still disbelief level of engagement. I think where, of course, retail investors are most of the time mostly late to the game, right? We are estimating that RWA's industry for the big numbers basically to be coming up. We are talking about the numbers like 16 trillion, right? For the tokenization of illiquid global assets is estimated to reach by 2030 per se, right? So what sort of transformative power do RWAs have in your opinion?
Okay, so there is one major thing that 97, maybe 98% of the crypto companies lacks from. It's revenue stream. The second thing, and we are not speaking yet about profitability, right? So the major business model so far was to create a token, to build a hype, to do the marketing, dump the token onto the people's head. That's it. That was the major business model. That's why from bull market to bull market, you've seen like 1% of the companies that were surviving because only these models were working. And RWAs in their depth have built-in revenue stream, right? So if you have tokenized US Treasury bills as Ondo provides or Open Eden provides or anyone else, you have yield that is coming from the interest rates that have been set on these assets in US. If you tokenize real estate, you have yield from rentals. If you tokenize hedge funds, as we do, you have yield coming from the asset management that hedge fund is doing on traditional market, and so on and so on, which is making these projects much stronger. So we've seen a retrace on the market, as you said, right now on the crypto market, and the companies that are operating in the RWA space are performing extremely well compared to everyone else. Why? Because they can afford to. They have money to do so. Majority of the other guys, they have empty pockets and they cannot afford to do anything with their token, with their assets, etc. And these assets usually have very simple utility. You can buy or sell. There is no any other utility in these assets. So it's a speculative assets, and over the time, if you have vestings and other unlocks, you have a big inflation of the assets coming onto the market. So those tokens are going down. So that's the majority of the market, and that's why RWA is performing extremely well. Maybe they are not giving you 200x's that every retail customer is looking for, but it's not about retail customers. It's about institutional money. Because, for example, if you will onboard as an organization like Ondo or us or Mantra or whoever, $1 billion TVL AUM, we call it on traditional market, how much retail you need to have $1 billion, right? And on traditional market, it takes like 1/25th of the average asset manager. That's it. So this is why, in my opinion, and as Piers said, I completely agree with that, speaking the business language and traditional financial language is important, because this is where the liquidity is, which is the king of everything. And this is where the profits are. Right now, crypto do not generate profits in general, different than the asset price growth. So yeah.
What are the main predictions, right? Because I'm just looking up at the numbers. We are talking about, well, out of 18 billion, by the RWA.xyz by the page, the total RWA value is close to 18 billion. We are seeing a massive sharp rise from just a couple of days ago, actually, from like 15-16 billion. So there was a 2-3 billion incline on the assets such as private credit, treasury, debt, commodities, institutional funds, right? And are those the directions that are going to be amplified, or there's something completely untapped that we're missing? Piers, what do you think?
I mean, in terms of, just like the amount of potential additional value coming out of this basket, or just kind of how they're, thinking about the business overall for the next kind of foreseeable 2 to 3 years.
Yeah. I mean, is there any particular clear direction that you think everybody else is missing out, right? Because we are talking about, again, tokenization of the private credit on the treasury debt, right? On
Hmm.
like those most obvious kind of like directions. Is there something
Sure.
that, from your perspective, is something that is completely untapped, completely missed out, completely left alone, and that is only going to materialize in the next two,
Sure.
3 years?
Sure.
You say.
Yeah, I mean, I think that treasuries is obviously the easiest asset to tokenize or build kind of mechanics from a crypto market perspective around it. And obviously, funds like Securitize have stood up a ton of different ways for firms like BlackRock to then also Apollo is a good example offer underlying funds, and you can basically fund it on and off via various chains in crypto. And I think in general, financially based assets are going to be the most important starting point, I think, for this industry and asset class in general. So I'm not surprised that's where we see the majority of interest and volume near term. But I would reckon, I guess, that once this is kind of verified that it actually works and in market, firms like Apollo and Blackstone obviously do have large real estate portfolios as well. And so there is going to be a lot of interest, I think, over the next 2 to 3 years around more kind of hard assets versus obviously, treasuries are just a digital asset in themselves.
Mm.
So I think we're definitely pushing in that direction. However, it's hard to really see why any firm wants to be the first one to take the leap, if you will,
Mhm.
in terms of like securitizing a substantial portion of their overall, say, real estate portfolio, or say a good example of what I've seen or heard about is that there are some mining portfolios that people want to basically securitize and create as a digital asset. The reason being is they have consistent revenue streams, no different from treasuries, a little more volatile, but to be able to securitize that and then offer that digitally is something that I think is quite compelling, especially in emerging markets where you don't have a ton of basically price stability in the underlying kind of asset, or price stability in the underlying currency for the given country. So if you look to Argentina as a perfect example, the idea of securitizing their assets in some meaningful way, knowing full well it's a very kind of consistent price stream that comes out of say mining. Why can't we offer that as a digital asset versus a physical one? And I think that there's a lot of kind of notion that people are very curious about it, but in terms of the mechanism of actually making that possible, there's still a bunch of speculation that
Mm.
nobody wants to take the first leap, if you will. And
Mhm.
so we're ultimately waiting for somebody to take a meaningful kind of jump at either fundraising through this mechanism or just securitizing some existing asset through some form of RWA.
Mm. Correct.
So
And
I will.
please go ahead, Pablo.
Yeah, I wanted to jump in because I completely agree with what Pierce said. And right now, the whole market looks like you have single asset tokenization. So you have US Treasury bills tokenized, you have real estate tokenized, right? But this is not so complex to tokenize these assets, right? And those assets provide you a very stable, low risk usually, but also yield that is not that you are not able to influence. This is a passive yield, right? On US Treasury bills, you are dependent on the US governments. If they will cut interest rates, it's not going to happen anytime in the future, as Pavel said. But if that's going to happen, the organization like Ondo or OpenEden, they have a big problem because most of the people will draw capital to put into better performing assets. If you have real estate, you cannot physically put more people or more organizations into that real estate. You will get like 6-7% maximum, maybe a bit more on the real estate. So what I believe is going to be the next big leap for the RWA markets is capital market tokenization, because this is where you can create different strategies that allows you on different using different risk factor to scale up the profitability, and you are not dependent on other people decisions or interest about the real estate. You use traditional capital markets liquidity to generate yield, and then you can tokenize that yield in form of token that is yield bearing token, for example, whatever. And you can provide low risk strategy, high risk strategy, medium risk strategy, whatever, that will provide different levels of profitability. Of course, the redemption period, everything needs to be set in there. But in general, this is, in my opinion, the big thing that is going to happen, because that will allow everyone to have product that is not dependent on some kind of external factors, but the product that is dependent on the capabilities of the asset managers to generate profit. And if they use not crypto, but traditional market, then that might be super interesting to accumulate like billions, tens of billions of dollars to manage from crypto on traditional market. Because if you have crypto hedge funds, to be frank, it's very bad. Like they do not perform. They have a glass ceiling of around 100, 150 million, and the yield is going down because they become the order book, and they start playing against themselves with just 150. On traditional market, 150, 200 million fund is considered a very small starting fund. And in crypto is being considered, wow, you are a large one. So there is scalability issue in here, right? So I believe with such an approach, crypto can grow up very much, and this kind of companies are going to win the market. But as Kennedy said, it's not easy. We are not doing this because it's easy. We are doing this because it's hard, and it's hard to do so because you have a lot of regulations that needs to be involved, like SAC regulations, European financial regulations, etc. So to do something like that, it's a bit challenging because it's much easier to be a broker like Ondo, take crypto, put into the BlackRock build fund, and that's it. And you are the broker. You don't need even the license to do so.
So what I'm thinking, right, is because on one hand we have all those emerging trends, and what I'm thinking in terms of the corporate engagements, many companies, are still deeply invested in commodities, right? Be it for import, export, or just holding a stake or reserves. Take gold, right? Some people say Bitcoin is a digital gold. How about we tokenize those commodities? How about tokenized gold, tokenized silver, tokenized uranium, for instance, right? So is there any particular direction? Because, it doesn't seem to be increasing as much as, it's one of the lagging sectors, inside of the RWAs commodities, right? Do you think it's something that's going to change in the coming months, years? Is that the one perhaps quote unquote holy grail, Pavel, that we're gonna see flying under the radar still from the corporate interest perspective?
Like from the traditional from the crypto corporates, the interest in tokenized assets is very simple and easy to explain. It's those are taxes. Because if you have, in majority of the places, if you have crypto transactions, they're untaxed transactions. So basically, imagine you have a tokenized asset, you deploy capital, it generates you a 6% yield because it's a tokenized real estate, and you have 6% untaxed profits. So if you want to put the same money on traditional market, you need to convert off ramp, you need to put there, you need to pay taxes from the income taxes, and that's the problem, right? So I believe that's why a lot of crypto companies are interested, and they made, as we've seen after the last hack on Bybit, where Bybit lost $1.5 billion USD. It was 5% of their net worth. So that shows how much capital they have, and that shows that where they don't have a place to deploy that crypto capital that they have in crypto, and they in the same time don't want to convert it to traditional market because they need to pay 15, 20, whatever percent taxes. So for them, solutions like tokenized RWAs are perfect ones because they are backed by some regulations, they are being provided by the organizations that understand the capital markets or traditional financial market anyhow, and it generates maybe not like ultra big yield, but it's secure the value of your money from the inflation, which is the most important goal for the company that have operational money, right? You don't want the money to lose on the inflation. And in crypto, you don't have such a product. So just showing that, it shows that there is amazingly big interest in such a thing. From the corporate, Web2 corporate perspective, they are interested because tokenized asset provides something that you don't have on traditional market. It's tradability 24/7. So today you can trade from Monday to Friday from 9 to 5 on some assets. Why? Do they shut down internet after 5 p.m. or what, right? Or you can trade on capital markets from Monday to Friday, 24/5, right? And on the weekends, the markets are closed. So if you can put it on the crypto and on tokenized asset, you can have fractionalization, you can have tradability 24/7. So for example, the guy with $1,000 in his pocket can own 1/800 piece of Berkshire Hathaway Series A class stock. Right now, there's zero liquidity there. No one trades Series A of Berkshire Hathaway because it costs 800,000 per share. But if you will provide such a solutions where tradability 24/7 is available, where you don't have the instruments that are intermediates. For example, in Europe, you have ADR instrument that pretend to be a Tesla stock. You are not buying in Europe Tesla stock, you are buying ADR, which is a artificial instrument. So with tokenization, you can remove that intermediate. And what that gives corporates? Transaction fees. More transaction fees. On some assets, they earn from Monday to Friday from 9 to 5, which means 70% more trading volume, more fees. On capital markets, from Monday to Friday, 24 hours a day, but weekends are off. So if you will include weekends to the overall trading volume, that you have additional 33% of more trading volume and fees. And from the perspective of like asset managers, hedge fund, or users, or whoever, it's super cool because imagine you have OPEC cartel deciding on Saturday that they cut the oil production, and I just had my short positions on Friday. I'm so fried, I'm so cooked, and I have so very bad weekend because I know that on Monday the market will open with a huge gap where you can put a full factory of trucks, and I cannot do anything with that. And 24/7 tradability is giving me an opportunity to do the damage control, etc., right? Based on the decisions. I don't have any limits. So, and for the capital, for the financial companies, they have fees on everything that is happening because they don't care about the price. They care about the volumes because that's a portion of that are the fees that they collect.
Mm. Is there any, well, for the context, right, Pierce, that what inspired this question about whether or not, the tokenized commodities may be the actual emerging trend that is still flying under the radar? That's what we are here to find out. One of the triggers that inspired that sort of question is, some time ago, Donald Trump, I think, and Elon Musk were supposed and scheduled to go to Fort Knox to actually measure the gold reserves, in physical terms, right? So what's actually in there, and that sort of also opens up the whole context of those tokenized commodities, tokenized RWA. So, what would you say? Is like the main emerging trend from your perspective, from all the fintech companies that you're holding a stake in, right? Did you guys see something particular? Is this commodities? Is this something else that you see your clients, your stakeholders, your prospects actually are looking into?
Well, importantly, these are two different baskets of work. I think so. Just for context for your kind of viewers, Merchant 7 is kind of a strategy consulting firm specifically for financial tech. But we predominantly work with people who are making better experiences within traditional markets. There's very few examples, I would say, of folks that are looking to securitize what they do or figure out how to tokenize what they do today. That said, there's definitely a lot of just interest in companies that I advise as to what can we securitize, and ultimately, like what is the long-term benefit of securitizing something like our underlying assets. But in terms of the emerging markets, I do work with a lot of high net worth families that ultimately are very much interested in this category, because there is obviously the limitations, if you will, of money transmission over the course of, say, as Powell said, the weekends, but also just in general flow of funds from Turkey to Malaysia to Brazil can be generally slow, and when you do want to basically hedge things or ultimately have a bunch of exposure into an asset very quickly, the simple reality is even 2 days or 1 days for wires and services, that is still industry standard, even at a very, very high level. Now there are desks and commodity desks that will hedge that out directly, but ultimately, if someone can deploy a significant chunk of their portfolio into a securitized product in a matter of minutes, there's just nothing better that can kind of offer that a comparable service, even on an institutional perspective. So I think in general that is a great tailwind for more assets coming on chain. But I would say it comes down to ultimately, is it a demand-based service or a supply-based service? What we see currently is that it's very much a supply-based service where there's a lot of people tokenizing treasuries and then basically turning around and selling that to existing crypto people. There's very few people, I'd say, from traditional worlds seeking out treasuries today and trying to figure out how they can kind of further kind of trade what they have in kind of the crypto kind of arena. So I think that the latter is super important, because what you need to have is some kind of kickstart, if you will, where traditional players realize that this is something that they can consider part of their core business. Versus kind of, it's great that we have some securitized assets, but it's not going to change our current workflow, or it's not going to change like our day-to-day in terms of how we trade, things like that. The moment it does start to really shift in their mind that this is just a better market for us to trade, that's when you actually see like a substantial inflow from traditional markets, versus right now it's basically a bunch of crypto natives who are trading kind of these new assets, if you will, but essentially just different pools of yield versus existing crypto yield, which as we know, a lot of it is kind of not exactly it's kind of like, where does the yield come from? Nobody really knows. This is a clear kind of area where you can understand that there's actual underlying assets that generate yield, and it makes it much simpler, I think, for people to invest in meaningfully. But we're really crypto natives, so we definitely need to see more around traditional markets and commodities being, I think, the first to really move in that direction, especially around contract settlement and hedging, for sure.
Which actually takes me to the final point of our today's session for the RWAs. It is a little bit of a hidden revolution if we think about it, right? It's still flying under the radar. Again, 100% year-over-year growth. It's emerging over the last 2 years. It's been going, and it's been kind of like in the pending stage. I think for even more years, for 5-6 years, very often. Many companies, many companies from within the DeFi industry, are already working with banks, with with retail banks, with investment banks, with central banks, on proposing some form of tokenized asset exposure, right? To an extent that, again, the market size itself is expected to reach almost $70 trillion by 2030. And again, just like I mentioned, we have those people like Larry Fink, on the BlackRock side, talking about crypto as the flight to quality, talking about, again, tokenization of bonds and stocks, and that Larry Fink urges actually SEC, to approve. Well, and not only SEC, but to popularize the whole approval of the tokenized assets as a whole new asset class on its own, right? So 30x growth by 2030, by right there, that it's supposed to aim at 10% global GDP per the statistics, right? And then at an actual annual growth rate at close to 20%. The final question, that kind of like has this whole context, Pavel, is, is this really not overestimated, or is it underestimated, or is it very well estimated to reach those gigantic numbers? Is Larry Fink really crazy by wanting to toast a whole new generation of assets tokenized ASAP? Is it something that we are ready, Pavel?
So it's not going to happen over the day. So that's first thing. Like we need time, as we needed time for the market to recover after dot-com bubble. But after that, the whole new economy has been built. Just to mention, digital marketing, social media, and e-commerce. Those are $1 trillion industries, and they provide jobs for hundreds of millions of people worldwide, right? And in here, we have also a big bubble. 97, 98% are worth nothing. They do not produce nothing. But there are like a few percent of the companies that provide a real value for the changing how today capital markets works. And if we will check the capital markets value, And then we will add to that the tokenizing of the other assets that are illiquid. For example, the building I'm currently on most probably is worth like $400 million or something like that, worth with Spire, right? And I cannot sell it like easily. If I'm the owner of that building, I need to find another guy that has 400 million bucks, negotiate with him for over a year, and there are not many people that can afford to do so. But with tokenization, I can put that building as an asset on chain to provide availability for other people for smaller ticket sizes. They will have a profit from the rentals. We will be managing that thing, and that way we can even change ownership or whatever, right? But you are not limited anymore to that. So if you will add to the capital markets, that is an obvious way, an obvious element to be tokenized, all the elements that are on the private market, which are private funds, private debt, which is like real estate, etc. Then I believe this, and this statistics was showing, this report was showing between 16 and 68 trillion. But then you can realize that the 10 GDP is basically what can be the value, the GDP of the market, because after all, if you will put everything you can tokenize, that makes sense because majority of the things will not make any sense to tokenize, and people still think it makes any sense. But still, if you will put like commercial real estate, etc., then that makes a lot of sense to put these things on chain, because tradability 24/7, all the things we mentioned before, but also instant settlements. Today, to settle simple transaction using my Visa or MasterCard card in the shop, it takes 3 days to settle. 3 days. That's why if you are a financial institution, MasterCard or Visa are asking you for 3 days turnover on all your cards you issued as a collateral. Because if you will collapse, they need to pay this back to the shops, grocery stores, etc., where you bought things or bought some services. So that's why, in my opinion, crypto is and not crypto, but the blockchain is technology that is solving a lot of issues we have today, because it's a one universal underlying layer to exchange any kind of digital asset. Another example today, if I want to pay with crypto for my flights to US, to Miami, I can do so easily, right? Because it's assets that have liquidity 24/7. But I can't do the same with Tesla stocks. I have like 100,000 Tesla stocks, and I cannot pay with my Tesla stocks for the flight tickets or anything, right? Why? Because there is no tradability 24/7. The tradability is when the stock market are open from 9 to 5, from Monday to Friday. So if you will provide liquidity 24/7 to these assets, they will become same tradable assets as Bitcoin and crypto is today, which is no one is thinking about that. I can then use any asset to pay, because the providers underneath will cash it out for dollars, and then they will do the instant settlement, and it's going to happen within a second. Today, to do something like that, it's unrealistic. It's not possible, right? So those are the things that will put a lot of new pieces of the puzzle into current economy, removing some of the old legacy part of this puzzle. And like us, a lot of people are thinking that the table is already set, that the podium winners are already there. I believe that the table is going to be flipped very soon, and the pole positions are going to change every year for the next half of decade, and we're going to see that.
So what I'm thinking, Pierce, right, is you're still holding a stake, as an advisor to TradingView after having spent, quite a significant portion of time as a general manager overseeing a lot of operations.
Sure.
So you have a very valuable intel into spreading this financial literacy, right? This actual understanding and popularization of education on the TradingView side, which I'm a big fan of privately, by the way, right? And is there any particular kind of like a direction? Is there any particular narrative, that your experience tells you from the TradingView perspective, from an overall educational perspective, RWAs have taken, or is it something completely untapped and that should just is yet about to start?
Yeah, I mean, what's interesting in general is I think Powell is right in kind of his thinking in general, in terms of like more efficient markets generally mean more liquid markets, generally mean like a flow in one direction, right? Like I don't see that reversing anytime soon. So I generally believe in the thesis over time. And the chart you pulled up, by the way, I just wanted to comment briefly, is I do believe that that is the general direction that we are heading. However, what's quite interesting is actually looking, within this kind of mix geographically, what are the nature of the assets that are actually being securitized per country. So while the US is obviously, or North America rather, is seen as the largest part of that growth curve, right, those are mostly going to be treasuries because the dollar is just the dominant thing that's being securitized today. So I would say this graph is quite compelling, but at the same time, you got to look at what's under the hood of what's actually being securitized. And I think that a large portion of the 2030 kind of plan, I think probably way more that's being suggested here should be treasuries. But when it comes to emerging markets internationally, I think a lot of commodity assets are going to be the majority of that mix across the board. So when it comes to TradingView, and in general, it's quite interesting always to check, like, is this popular as a narrative on TradingView versus, in the crypto sphere in general? I can tell you this as a thesis within the TradingView ecosystem is still relatively new, and in fact, barely discussed. Now, what does that mean in general? One is that, for the most part, securitizing products is very much a crypto native discussion. It's not really reaching mainstream investors. If I'm an average meme trader or something on Robinhood, I'm not thinking about securitized products and lending and yield stables and stuff like that, right? It's just a different audience. And so we always do track kind of what the average audience is thinking versus what the more kind of crypto native folks are thinking, and as a result, we can be quite indicative of kind of where the market is today versus where it might go tomorrow. But that said, I mean, people are becoming more comfortable with having a large percentage of their portfolio in crypto, and I think that's obviously a first step because it then leads them into more stable products over time. Just being able to buy that via kind of non-traditional markets versus traditional markets, but I think in general it is still very much a early stage conversation, and generally I can tell you that some folks on TradingView are looking at it, but they're small groups, I would say, because for the most part these are people that are kind of trading intraday. And with these more kind of RWA products, we're talking about holding assets for longer periods of time. They're not so much trading them as aggressively as say GameStop's or Netflix or Tesla earnings or things like that, which do still make up the majority of TradingView's kind of traffic overall. Because when we're talking about this as well, right? We have 75 million people using the product every month. 2/3 of those are international as well. So I sit in the US, and it's obviously our biggest business by revenue, but from an actual traffic perspective, emerging markets are becoming a dominant kind of a player on TradingView. And this all backs into people just discovering how to invest in the first place, right? So while we're talking about, way out here on the spectrum, which is, people securitizing various commodities and selling them in crypto, like people are just learning how to open Robinhood accounts still. So there's like this huge chasm that we have to cross still. And really in terms of like modern adoption of something like this, I mean, it's super cool to talk about it from, kind of where the industry is headed, but in terms of people, really broadly understanding how to adopt a product like this, there's still like 2 or 3 major kind of, transformative events, I think, before we really do see, kind of some larger scale adoption across the board.
And that's
So
Pavel,
I
please.
wanted to jump in with one thing, because what I like that Piers is very often speaking about securitization. And it's worth to explain to our listeners one thing, that tokenization and all the nice RWA words are something that has been on the traditional financial market before. It's not new a concept at all. Securitization, everyone watched a Big Short movie, and securitization was what caused the 2008 big great financial crisis to happen, because they were packing into some sort of tokens, but those are securitized real estates, and they were selling and trading this securitized mortgages. The only difference between tokenized and securitized assets, real estate, was that the rating companies were lying about the value of the assets underneath. And then the gap between the real price and the market price was so big that the market crashed. In crypto, the good thing that can solve that thing can be oracles or things that will provide a real value, because you need to have a consensus about the value of the assets that are tokenized or securitized. So the reason why everyone in traditional financial market is super into also tokenization, because for them tokenization is securitization 2.0, and they are all red when they hear this word, because they know how much money they made in 2008 on securitization of the whole market, and they think that they can repeat that, but in a little bit different environment. So this is not a new concept that has been before. It cost 2008 to happen, and a whole great financial crisis. We are here back again, solving the major cause of what happened, this big gap back then.
So at times it does feel, just referring to what Piers mentioned, that we are still hidden, right, on the RWA side, that it's still further away from where we want it to be, I'd say, in terms of the actual accessibility and the adoption, while we have, just like Piers referred, people still learning how to operate within Robinhood, or even an example of TradingView inside of the emerging market. So very rightly on point. Still a lot of untapped potential, it seems. Good for everybody holding it back in the RWAs. It sounds the way by the means of the discussion. Ladies and gentlemen, it's been such a pleasure to be hosting this session with you on the RWAs, on the future and of the tokenized assets, joined today by Paweł Łaskarzewski, CEO of Nomad, Fulcrum, and Piers Crosby of Merchant 7. Thank you so much, gentlemen, for joining today's discussion. It's been an honor.
Thank you very much.
Appreciate it, Adrian.
Thank you. And you guys, everybody, make sure you hit the subscribe button, smash the notification bells as you'll always do. Let's make sure to have you drop a couple of comments, drop a couple of questions that we're going to cover as well. And I've been your host, Adrian Zinchik, CMT, Charter Market Ignition, and see you on the next episode of our RWA series. Peace out.